The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow up 280 bucks. You get the Nasdaq up 60, S&Ps are up 16, gold contract flat, $12.51 an ounce. You have silver up a penny, $14.76 an ounce. Light sweet crude taking it on the chin once again, down $1.30, $48.56. Light sweet crude, folks, 45 bucks. That's where it wants to go. Notes and bonds still won't back off. You get the 10-year note up 2 ticks, 120.23, 30-year bond up 5, 143.12. Now, what we are doing, you're coming into those highs, volumes contracting. You get the Fed starting meeting today, 2 o'clock tomorrow afternoon. Action in a huge way. King dollar down 126, 96.430. The euro is trading at 113.68 to $1 US. The yen is out here at 112.5. And the pound is at 126.53, all to $1 US. Tom O'Brien, what's going on?
Quite a wild market. So much for calm markets into the holidays, man. Not quite yet.
I'm telling you, you got to love it. This is a market extraordinaire, folks. And what is, different cycles inside the market, you can learn different things. The way this market is set up right now, folks, if you don't understand options, first off, our man Kevin Hinks, TD Ameritrade, they got an outstanding show every trading day right here from 11 to 12 Eastern Standard Time. Now, we talk about this a lot, option strategies, but I'm telling you something. This is one of the best setups that I've seen in a long time. I don't care whether you're a bull or a bear. It doesn't matter. And what I mean specifically is this. It's Tuesday. The announcement's tomorrow at 2 o'clock. Option expiration is this Friday, right? This is the ultimate, folks, in defined risk. Kevin Hinks, talk to me, man. This is wild,
Good morning, Tom O'Brien. Good morning, Tom. Good morning, Tommy. How we doing?
We're doing great,
morning,
man.
Kevin.
Yourself?
I mean, this is a market, Tom, that I literally spoke on TD Ameritrade Network yesterday afternoon, and I said, I feel like I'm giving a eulogy for these markets. But what investors and traders should be looking for going in tomorrow's Fed meeting and their announcement and subsequent press conference after is this: uncertainty turning into certainty.
Yes.
I think a lot of what's driving this market right now and a lot of investors are worried about is just uncertainty. And what happens is when uncertainty dissipates and turns into certainty in terms of interest rates, in terms of trade, that's when people are going to start to take a look at this market and realize that everything is cheap right now. I mean, if you have a shopping list of stocks that you like at certain levels, there's a lot of them out there, guys.
Yeah. Well, Kevin, I was looking at the aspect, and we've been pushing so many people to make sure, especially, if the people don't understand options, you need defined risk right now. And as I said at the beginning of the show, I love the aspect that we have option expiration this Friday. We have 2 o'clock tomorrow. This is going to be a big number, man. I mean, this is I don't remember a recent time, let's put it this way, that the Fed Fund futures are still hanging at 70 the day that everyone thinks we're going up on rates.
Tom O'Brien, I have never gone into a Fed meeting that I can remember in my lifetime less confident of a Fed rate hike. That seems obvious. I've never been less confident or more hesitant in terms of there's a chance, like Tom, and you've heard me say this a million times, the Fed doesn't like to surprise the markets.
Right.
Good or bad, they don't like to surprise the markets. But that being said, there is some clear hesitation. Wall Street Journal article this morning. I mean, it is all over the place how it's possible that Jerome Powell may hesitate here and not raise rates. I don't 100% believe it, but like I said, I'm not sure.
No,
and I'm
listen.
always sure on these things.
There's no doubt. And I read this stat last night, Kevin. So this stat, folks, if you hadn't heard the stat yet, this is quite a stat. So picture something. The bull market in bonds, folks, began January of 1981, okay? There's only 2 times in 74 rate hikes since then that the S&P has been down on a 3-month, 6-month, and yearly basis, which we are right now, that the Fed ever raised rates. And the last one was in 1994. So I know what you're saying. It seems impossible that they're not going to. And that's why I keep saying, folks, it looks like to me between the SPY and the Qs right now, you're going to pay maybe 1.2, 1.4% in premium at the money, right? Options. That's
right.
Like awesome, man. I mean, to me, it's like, okay, man, that's a good number, man. I mean, we're going to move. I don't know which way we're going to move, man, but we're going to move.
I agree completely, Tom. And this could be if all the the dominoes fall in the right place, this could be the mother of all relief rallies that we could have into the end of the year. And with the seasonal factor that is accompanying it and major December expiration on Friday, this could be a massive relief rally.
I got to tell you a crazy story, Kevin. So picture this. And because of what you're saying, and I absolutely agree, I remember, and the Asian contagion, folks, okay, and I know there's plenty of you that had listened even in 1998.
Sure.
I was on the air. Now picture this. At that point, Kevin, we used to trade live on the air, right? And what happened, folks, is Greenspan and Rubin came out when the market was opened, right? And they cut interest rates like 2%. And I'm screaming on the air, this ain't fair. I'm shot in the market, Kevin. This ain't fair. I can't believe it. That's how naive I was. I swear to God.
Think about how transparent the Fed is now. And I remember standing in trading pits, Tom, going, all right, what just happened?
Seriously.
Something just happened. And they would move rates by, a half a point at a time, not just a quarter.
Yeah.
So,
yeah.
But this is a highly anticipated Fed meeting.
Oh, yeah.
The announcement will come. I think it's must-see TV. This is our profession. This is what we do. But I think a lot of the world is going to be watching this announcement.
Yeah, there's no doubt. And see, the thing that's really wild when I'm looking at it, I mean, fundamentally, I think everything's going great. So the market, is basically saying, hey, well, there's something else going on. But I look at that and say, hey, listen, we've been up for 10 years, okay? A correction's a correction. So, we'll all see, where this is going. But they're in a spot, man. They're definitely in a spot. They're in a spot because, of course, they get the political, pressure. But when they look at it fundamentally, they say, hey, man, it's like, this market is taking a hit, and they claim they don't look at the market. But guess what? Everyone looks at the market.
Everyone looks at the market. That's right. They're not, but it's not part of their job description. But that doesn't mean he doesn't look at the market.
Yeah, no doubt. Listen, folks, right here, you got to listen to the program. And if you don't understand, well, listen, whether you understand options or not, you want to do it because that's the type of market we're in right now. You need defined risk. And in this case, we're in an inflection area. It doesn't matter whether you're a bull or a bear. Both sides of that trade, folks, could be where it's at. Kevin, you have a great one, safe one. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thank you. Stay right there. Tommy and I are coming right back, folks.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us. We have the Dow Industrials up 274, Nasdaq up 62, S&P's up 14. And, you know, Tom, we talked about the Fed. You know, what's so wild out here, folks, is that it's all, you know, you had Trump hammering the Fed, since the last 3 months. You had a couple of market participants coming out the last few days, you know, saying, hey, listen, this is not the time. So this is going to get so interesting, man, coming into tomorrow. You know, just as we were talking, it's like, okay.
It definitely is, right? What is the Fed Fund futures at right now?
It's
It's still like 7.
As we were talking, this is what ended up happening. This was pretty wild. When we started talking, it was at 67. Now it's at 70.8, which that's 30% saying, hey, you know, it could go the other way, you know?
I agree, and that's everyone says it's not. They don't use the word guaranteed, right? But that it's baked in or it's coming, and 70%, man. It's not. You know, when it's a guarantee, that number's at 99%.
That's not big, exactly. And this is the first time that I remember. Yeah, it definitely is. That, you know, looking at this, that okay. What happens, folks, is that normally the week of Fed Fund futures, when we're going up, you know, that thing's at 98. You know, it's like, okay, there's a 2% chance that, you know, something else will come up, but not 30. And then what has happened just since yesterday, so picture yesterday when I was doing the gold report and market insights, this number for the rest of the year was 37%. This morning when I did, it was 30. Now it's 31. And that 31, folks, is only for one rate hike. You know, we all keep hearing that there's going to be 2. Well, first it was 3, you know, like say 4 weeks ago. Then people saying 2. Well, that's not factual. Right now, if you're basically trading on where the money's going, the money is saying that there's only a 31% chance there's going to be one rate hike. You know, so
yeah. And the graph you have there on the bottom of your chart of that Fed Funds futures, it has the white bar is the probability of a hike, and you can see that it was hanging up around 80 for a while, and it's at one of the lowest levels it's been at since almost the beginning of September.
Right. Look at that thing yesterday. Was that yesterday? Holy cow. Yeah. I mean, I think, yeah. That's December. Yeah. I mean, it's going to be really wild watching this thing shake out. And then, you know, of course, if we look at the 10-year yield, folks, you're at 2.84. And if we bring this back, which I'm going to just bring it back a whole year, you're going to see we're right in the middle of the range. 2.39 was the low. 3.2 is the high. If we bring this 6 months, I think it's the lowest in 6 months. Yeah, we're at the low end. You know. Yeah. And then if you look at that at the aspect of the world, what you're going to see is that we're still high in a huge way too.
That was an interesting statistic. I was just going to say, you're talking to Kevin about the 3 month, 6 month, yearly being down. And
yes.
Only, you said 2 rate hikes out of something like 74, 94 over the last whatever it is.
Out of 70, so it's 2 rate hikes when we've only had 2 rate hikes. When the S&P has been down for 3 months, 6 months, and a year, which we are, and that's 2 rate hikes since 1981. The last one, listen to this, the last one was in 1994. And that was in 94 because they felt inflation was getting away from the whole deal again. Isn't that crazy? I mean, so...
No, it is crazy, but it does make sense because guess what? The Fed's not supposed to be hiking when the market's going down in the last 3 months, 6 months, year. I mean, you know, not that it's not supposed to, but that's not the recipe of usually how things set up.
It's not.
It's supposed to be a slowing mechanism, right? You're raising rates to slow growth.
Right.
Well, if the market's gone down in the last 3 months, 6 month, year, why do you need to slow growth? Well, this is quite a market in that coming off quantitative easing, all of this stuff, coming off zero interest rate environments, we've had a run in the markets like we haven't seen forever.
Right.
So maybe even if we've had a decline in a 3 month, 6 months, and realistically we're down on those levels, but you're talking about only down marginally on the year, right? 2-3% or something. 6 month, it's probably pretty similar, maybe. And maybe the 3 months a little intense, but you know, it's possible. But still, a pretty cool statistic to keep in mind come tomorrow.
It is, and what you have, you know, in that same article, folks, there's been $3 trillion wiped out in our markets, not the world, just our markets. And that's since October 3rd, $3 trillion. So when we look at this, if you happen to be watching Target TV, what you're going to see is this. Right now, with our market up today, the Dow is still down 3.6% for the year. The S&P is down 4%. Nasdaq's down 1.5%. When you look at all the world markets, our market is still the strongest in the world. I mean, I haven't seen this, well, I don't think any of us have seen it since 2008. These are monster numbers, man. As you're looking, if you're looking at the screen, look to the right-hand side. And what you're going to see, you know, Europe is down anywhere from 17%, let's say the FTSE, up to 20 for the DAX. We go to Asia, and what you're going to see, put that baby up. You're going to see the least amount is in Japan. It's down 7%. Then you go to China, and you get 26 and 34%. If I bring you to, let's go right across the world. Let's see.
Yeah, huge numbers, man. I mean,
we go to Korea. We go to Korea, all 20. Look at this in Korea. Everything, 20, 25%. Australia, 15%. New Zealand is kind of like us, not bad. 3%, and then almost just barely flat.
Yeah.
Pakistan, 25 to 29%. Sri Lanka, 19%. Thailand, 7 to 10%. Indonesia, 10 to 16%. India, 3% to 12%. Singapore, 12 to 13. Malaysia, 11. Philippines, 18. Vietnam, 8 to 13. Bangladesh, 17 to 20. Mongolia, 9. Laos,
it's really remarkable.
20. I mean, it really is. This is, there it is. That's all the world markets. We just went through them. Guess what? They might go up 25 basis points, but they're going to, if they do go up 25 basis points, that statement is going to have to be the most dovish statement. That's going to be like a flock of doves.
I agree, totally.
Oh, man.
I know.
And so,
it's crazy.
Watch this, folks, okay? You know, yesterday we were talking about the XAU, the HUI. We have ABC structures up. I didn't get the volume till last night, but the bottom line, you get the volume. So that in itself, you know, it's saying, I suspect the Dovish statement itself was going to make gold go higher. If, in fact, we don't get a rate hike, you'll see this thing explode. You'll see everything. If we don't get a rate hike, folks, everything will explode topside in a huge way. I mean, there's no doubt, because what will be on, once again, is, you know, bottom line, inexpensive money. Let's, you know, but we got some good volume. Yesterday we did 38 million. All we had to do was over 35, and you did it. That's in the XAU. So that's saying the bottom line, higher prices coming at us. The Gold Bugs contract, same type of setup. Now the Gold Bugs contract was pressing into its highs, but we got the juice. We did 29 million shares versus 28. So bottom line, whether we get a rate hike or not, you're going to get a dovish statement. Stay right there, folks. Tommy and I are coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You have the Dow up 295. Nasdaq is up 67. S&Ps are up 16. And Bloomberg just updated, folks. Let me pull this S&P up. They just updated. I was just talking about $3 trillion, Tom.
Yes.
As of last night, it was $4.4 trillion.
Whoa.
Yeah. So
that got out of hand pretty quickly.
Yeah, seriously, man. But
and I'm sure it clawed back some of that, this morning.
It did. No, it did. It did. But you can see you're talking about monster money here. Into traders and investors' heaven, folks. Okay, it just goes poof.
And like you were saying, I mean, it's interesting, and our friends Eddie and Eve's texted me today saying that Ethan told him, one of his other brothers, that he should watch the show because the markets are going crazy. So it's kind of that it's permeating to the point that people who are not in the market are beginning to hear about the carnage that's been going on in the last 3 weeks or whatnot, because you can't escape it at where we are.
No, you can't, because what does happen, folks, is this: I remember the '87 crash. So picture an '87 crash. I wasn't in the market. We were in the airline business, but I remember it specifically because we had a lot of high-end clients. What happened then is that was high volatility beyond belief, but it was very fast, folks. Okay, it went in, it came out. But what did happen, Tom, is that about a year to about 15 months later, we came in to a hard recession. And because what it was, that money was lost.
Yes.
And it took that long, I mean, to come, and it was a hard recession that came in there. And I really learned a lot then that, when markets go down, even in that case, it came back very quick, but it was too late because people did bail out. And so they lost all that money. They had, the growth could go along, and then it got slammed, man. So it affects everyone. That's the bottom line.
Sure.
It affects them whether you're in the market or not in the market, folks. That's how it goes. It makes sense because guess what? It's the economy. It's it's the jobs. It's production. It's all the above. So
how about oil? Can we take a look at oil?
I'm just gonna go to oil, man. I know. Look at.
Got to cover it at some point in this hour because, man, it just cheaper prices across the board at the gas pump. Gotta love it.
Listen, you got the unleaded gasoline wholesales $1.40. Crude right now is 48.81. It's been as low as 47.84 this morning.
Look at that chart.
Yeah. Oh, this is a one-way deal. And what you did, you broke down again yesterday. We were basically going sideways since November 23rd. Gave it up. And then what you're going to see, where I'm getting this 45, folks, I'm ballparking it. But what you have is that once it broke the top of the range, which was almost at the 55. Yeah, we were at 53, 55 level. That's serious business. And then, bottom line, 45 to 42. That's just where you are.
We could be there by Friday. I mean, we could be there by tomorrow.
Oh, shoot. Listen, there's no doubt, man. This is a heavy breakdown. And what happens, folks, when you break a range, it's really just like a magnet. It's like, okay, you have all these traders saying, okay, listen, the top of this range is 56. 55. It's like, okay, can we get back up there? Well, guess what? The path of least resistance, Jesse Livermore, it's a lot easier to go down first, just because it's closer than going up. So
yes, yeah.
And that's serious business. And that's technically, now fundamentally what you do have is that, if you remember, it was only, 3 weeks ago that the United States became net exporters of oil. You can go back. When I first started the Gold Report in 2001, if you remember all the books, and we were at the shows, right? Peak oil. There's all sorts of people who were going to run out of oil. It's like, okay, yeah, we were going to run out of oil at the Arab embargo in 1967, too. And guess what? Oil's like a big bathtub, man. You just turn on the faucet, man, and it's like everywhere,
Yeah.
So it's going to be a wild one. Now, if we look at this bounce out here, if you're a bull, folks, you better be careful. And this is why. What's bouncing out here are the stocks that have absolutely smoked. You get AMAT up 4.7%, Lam Research up 4.5%, CLAC up 4.4%. Those are all chip stocks. NXPI up 4%. And if I show you, lamb in particular, you know, when you bring this up, you're going to see this has been on a one-way route for quite some time. You know, we've gone down from $234, and we hit 136 this morning. So it's a problem child, you know.
Yeah.
What you'd like to see is let's go to Microsoft. So Microsoft, you know, is one of the best performers out there. See, you'd want Microsoft to be up, and it's flat. That's what you'd want to see.
Sure.
You know, because guess what? Microsoft is really still very close to its highs. Yeah, I mean, you put this on a monthly basis, you can't even tell that Microsoft went down.
Yeah.
You know, and to me, Microsoft looked like it's going to go back to 116 anyway. But what you don't like to see, and bounces in a market that has been trending lower, are the stocks that absolutely have got smoked having the biggest bounce, because that's a normal deal. That's just, that's just kind of how it goes.
Yeah, there's no strength there.
No.
I hear you.
When we go into the Dow Industrials, we take a look at the Dow. What you're going to see, the movers out here. Of course, we're going to have Boeing. So check this out. Out of 280 points, folks, Boeing's putting 87 in. Goldman's putting 30. Forget Goldman, man. Goldman has so many freaking problems, it's insane. Caterpillar's putting 24 in. Home Depot's putting 17. Let's go to Boeing. So let's go to the best bounce that's out there. And look at this. This is going to be anemic, too. So if we take this, we put this on a weekly, it's really still at its highs, you know, but it doesn't have the juice. And now what's going to happen, what we haven't even talked about yet, is the government shutdown.
Yeah, I know, right?
So, you know,
quite an end of the year we got going on.
Well, it is, and the effectiveness of this, the way that goes, folks, is that it. There's going to be the last time this happened. I mean, CACI. I remember this because this company. There's a couple companies that will get smoked. CACI, a product technology company, delivers client solutions, system integration, re-engineering, government, commercial. They serve government and commercial markets primarily in North America. This company, on the last time, this got. What happens, folks, is that what you have is that most of the employees of the government are going to get paid. The contractors, however, don't get paid. That's where the cash flow gets lost.
They'll just have a lull, right?
Yes.
However long it's shut down, and then they'll pick back up. And,
Exactly. This is one of the large ones. I forget whether they bought General Dynamics, but it's interesting because you can see that, you know, I'm not sure whether in November when this got smoked is that, you know, traders realize that, okay, hold it. This is the one of the biggest companies that the last time this happened, factually, you know, they lost well, they didn't lose money, but they lost cash flow, and they didn't make as much as they normally make, you know.
I'm going to let you finish up the show, man. I'll talk to you later.
Hope you're feeling better. Okay.
Thanks, man.
Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Market's going to have a hard time holding price. You got the Dow right now up 200. NASDAQ is up 56. S&Ps, folks, are only up 9. I'll get into those in a second. Want to get into Blue Apron first, okay? This is an indication that, this stock never should have went public in the first place. So the low for Blue Apron for the year is 88 cents. That's today. The high is $4.50. This equity, okay, bottom line, it's a mail delivery service, okay? Now, that being said, if we pull this back, what you're going to see is that it went public at $10 a share, June 28th. Bottom line, you got a year and a half ago, goes public. It's already lost 90% of its value. We take a look at this. This is going to go out of business. Let me just look at this for a second. So, value-wise, yeah, look at this. It's all over for them. So this is what you have. They were doing $77 million in 2014. 2017, when they went public, they pushed it up to $881 million, right off the bat. Okay, so this is probably we'll see whether any fraud gets done on this or they take it apart, because what you have is this: it goes from $881 million next year, $665. And I guess the other side of that, Uber Eats is eating everyone alive. And now next year they look at $650. Loss-wise, they're in a loss column in a huge way. Technically, when you look at this is going to be an ABC down today. Yeah, it's breaking lows. Let me see this thing. It has volume. So you got 151. You get 50 cents. Yeah, well, 50 cents is game, I guess. Pretty intense, man. Pretty intense. That's a heavy loss, an extraordinary one-way trip on the way down. Let's get over, take a look at that S&P. They're selling the S&P off. So you're up $7 right now. Okay, so we get a high. The high at 950 doesn't have volume. What time is it? 10:44. So this doesn't have a lot of volume yet either. But you close 25.66. We're under. That puts game right down into 25.52 in about a heartbeat. And what 25.52 is, folks, is that at 10 minutes of 3 yesterday, you had a nice pop inside the S&Ps, 167,000 contracts. Now, the way that would work, if you get into the 25.52, which I expect we're going to go test it, that's 10 points lower. If you get into that with volume, then you're going to start talking some heavy low numbers coming at you very, very quickly. because you got to remember something, that when you have a downdraft like we are in right now, at the beginning of the downdraft, money managers, they're going back and forth, back and forth. Should I sell? Shouldn't I sell? All this. Bottom line is that, you know, depending on how long you've been in this business and running money, you better not have that thought process anymore. This is a downdraft, man. You know, and what does happen is that as downdrafts accelerate, they get faster and faster and faster. That's just kind of how they go. You know, markets can grind higher, higher, and higher, and then what ends up happening, they'll build cause, then they pop again. Inside a downdraft, they work a little bit differently. They'll build the cause, but there's a step down, plays around for an hour, hour and a half, another step down, plays around, another step down. That's what they do. So when you're trading these, what you should be doing is that you just use trailing stops, because you don't know how long that trend intraday is going to last, meaning on the way down or on the way up. That's kind of how these shake out. If we go let's go into the NQs for a second, take a look at the NQs. Okay, so the NQs are just about ready to break down. Okay, this is going to be a trip. So what you have with the NQs is this: we have the high that was spiked out here at 950, doesn't have volume. Now what you're doing, you're going to go test the low out here, which was 65.07. Right now you're at 65.21, and then the other side of that is going to be 64.83. So what happens there is that, let's see, 7 minutes. You get 3 more minutes. If you break this thing, that 64.83 is game. That's how this kind of shakes out. If we go over to simultaneously, what we just had happen there too, by the way, as the GDX just turned around and got more juice also. What is so unique about this downdraft is that this is one of the first times in a long period of time, including 2007, 2008, that the gold equities are about the only thing that have held up in this marketplace. You know, so we'll see how that does shake out. And that's with the dollar being at all-time high. Well, not all-time highs for the last few years. If we take a look at the dollar thus far has not given it up. You know, we had, let's see. Yeah, see, this is, oh no, DXH9. Yeah, the dollar has light volume. See, okay, at 6:30 this morning, we were at 7,000 contracts in the dollar. We're only at 9,000 now. So you're going to need a lot more volume than that in order to basically get underneath the August lows once again, which in this contract, in the March contract, is 95,830. And you'll see, you know, people are just sitting there waiting. That's how this shakes out, basically. You know, there's not a conviction inside that dollar index just yet, or the dollar in general, as to which way they want to trade that market. Hey, we'll see where it goes. Let's go over to the British pound for a second, because it seems that each and every day the pound is basically trying to get back inside its range, the higher range. That range would start at 126.96. We got to 126. No, 127 today. Hasn't held it. But if it gets inside that, that's going to be saying, hey, guess what? That thing's going to go topside. And if we see that happen, that will put pressure inside the dollar, as well as the euro. The euro already looks to me that the euro does want to get up into this 118 area. The yen right now, that came down hard last night. You know, the yen got down to 112.25. Your swing is 112.24. That's telling me that, yeah, the yen is going to basically get down to the 111.60 mark. And if that's what you get, you're going to see a nice explosion also topside inside that metal market. Let's go to silver, because silver is still the laggard, folks. In fact, the silver equities are just a dog. So if we take a look at silver right now, yeah, this is a problem for the metals market in general. Silver is still lagging. I mean, in a big way, too. There's nothing here. You know, it's been going sideways, but we need a bid inside silver. Just doesn't have it. And if you take a look at the silver equities, same type of setup. You know, the Pan American, after they're taking over Tahoe, that got smoked from the takeover. This is just into the gaps now. Our phone number is 877-927-6648. We have the Dow up 212, Nasdaq up 60, S&P's up 9.5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, February 9th, right? Bottom line, we've been talking about it a while. We're there now. We talk a lot about share buybacks. If you want to see the amount of money that's wasted, so basically management can try to get their shares, basically keep their shares up, you only have to look at the energy sector. Listen to this. This is quite a number. Since the third quarter of 2017, the energy companies have spent $25 billion on repurchases, right? And the only equity and all of that is actually over the price that it was in that area is Chevron. You talk about wasted bread, and you know it's amazing that management companies do this on a continual basis. And of course, you know they're claiming that they're supporting the stock. Well, what they're doing, folks, is they're supporting the stock because they have options on the stock. And a couple of the biggest ones that have basically blown their brains out happen to be Halliburton and Schlumberger. It's pretty wild, man. SLB. And this goes, oh, you know what's amazing, man? This just goes over and over again. So can you imagine if they didn't buy their shares back, where this equity would actually be? Schlumberger, when I just bring this back to 2017, was at $87. It's 38 bucks. And they spent, let me see, total, yeah, they spent $500 million. $500 million. Halliburton spent $269 million. It's like, give me a break. And Schlumberger, so picture this, from the $500 million, they're down 41% on it. Halliburton spent $269, they're down 32% on it. Pretty wild. Oxy spent, they spent $1 billion, and they're down 18%. I think there's so much for trading. They better get time in the trade, man. Stay right there, folks. We have Fast Market coming up next. Then, of course, we're going to go to our man, Basil Chapman. Steve Rhodes, Dave White, be back this afternoon. Have a great one, folks. Have a safe one.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.